Bitcoin has recently experienced a significant drop from its previous highs above $70,000. Despite this, many are unaware of the underlying causes. Here are 3 key reasons for the current crash. Number 1. Mt. Gox settlement. Mt. Gox is preparing to distribute 143,000 Bitcoins to its creditors, causing a massive influx of Bitcoin into the market, increasing supply and driving prices down. Number 2. ETF outflows. There has been a substantial outflow from Bitcoin ETFs, totaling $1 billion in the last 10 days. This large-scale selling is contributing to the downward pressure on Bitcoin's price. And number 3, miner sell-off. Bitcoin miners have been offloading their holdings, with over 30,000 Bitcoins worth $2 billion sold this month alone. This miner capitulation is significant and has historically occurred post-halving, leading to further price declines. Historically, Bitcoin experiences multiple significant drawdowns during bull markets, often around 30% or more. Currently, the drop is about 15%, which is within the expected range of volatility.
Crypto prices tumbling this morning. Joining us now, Anthony Pompliano, founder and partner of Pomp Investments. When do you look at what's happening with crypto and decide that there needs to be a reason for what's happening? I mean, it moves like this back to 61. Watching Bitcoin for the last 5-10 years, the moves happen like this all the time. Do you have 3 reasons why Bitcoin has come down from above 70 to where it is now?
I think it's important first to put it in context, right? Bitcoin's up 40% year to date. It's up 100% over the last year. So in terms of volatility, this is pretty expected. What we've seen in previous bull markets is that there's 4, 5, 6 different drawdowns of 30% or more. We're down about 15% or so. So this is right within kind of the band that you would expect. I think that what occurs is when an asset goes up a lot, people start to take profit. And so what we've seen is this explosive rally to start the year. People naturally take some of that profit. We're also seeing a lot of people doing the basis trade, where they're basically going long the spot market and they're shorting futures. And so what that is doing is it's dampening some of the volatility, which allows for leakage and some selling. And then lastly, I think, is we get to the summertime, right? You see this, a lot of people in the public markets will say, invest till May and then go away. And so you start to see some of that as well here, where people are seeing these really explosive moves at the beginning of the year. And then also Q4 tends to be a big kind of quarter for crypto as well. And so Q2 into Q3 tends to go kind of sideways. I think that's just what we're seeing.
A few years ago, the focus was primarily on Bitcoin and crypto, but now AI is the hot topic. Many people don't realize that both AI and Bitcoin are part of the same larger trend towards automation and technological advancement. AI will create vast amounts of wealth, and Bitcoin will serve as a means to secure that wealth.
What I think is really interesting is, a couple of years ago, it was all about Bitcoin and crypto. Now, a lot of people are talking about AI, but I think people are kind of missing that these are actually part of the same trend. Right? We're going into this automated world where AI is going to create enormous amounts of wealth, and Bitcoin is going to protect that wealth. And so when you start to see these technologies coming together, an easy way to see that intersection is, what money are the machines going to use?
Then why is it diverging?
Well, what you start to see is people are putting capital, they outlay it into Bitcoin, into crypto, and now they move over to AI, they'll go and they'll invest there. But it's not like Bitcoin is going and falling, 50%. What they're going to do is, as AI continues to, kind of get larger, there's more wealth generated there, people are going to look to protect that wealth. And I think that they'll go back into Bitcoin. And so my guess is that AI and Bitcoin are both a 10-year trend here. We've got massive tailwinds. And the good news for the United States is there's a potential that GDP will actually increase because of the productivity from AI, and then Bitcoin being able to protect a lot of this wealth. I think that people looking at this as what's going to happen day to day or week to week are missing this huge tailwind for the next decade.
What about these Bitcoin ETFs? They have been hugely successful, but why are we now seeing such a tremendous outflow? Wasn't this time supposed to be different? Some people believe Wall Street is selling off, but it's more complex than that.
No, I think that what we've seen in the ETF flows, when you go and you analyze it, about 80% of the flows into the ETF were actually retail, right? People thought it was going to be big institutions, but only 80% was retail from some of the analysis. What takes a long time inside of these organizations is they've got to go to their investment committees, they've got to make a case, they've got to go through the approvals. If you're a financial advisor, the number one job you have is don't get fired. And a great way to not get fired is to make sure you've done the work, make sure you're risk mitigating, and really understand what you're about to buy.
Don't get shaken out, especially at this crucial point in the cycle. We are at a pivotal moment, an inflection point. My conviction remains strong and unwavering despite price fluctuations. This is bull season, and we have significant catalysts catalysts on the horizon. The Ethereum ETF, the upcoming US presidential elections, where cryptocurrency could become an election issue, and the expectations of a rate cut are all on the table. The launch of cryptocurrency ETFs worldwide is a reality. Sovereign funds and countries will start holding Bitcoin on their balance sheets. We will see more companies following MicroStrategy's lead. For instance, Michael Dell, the CEO of Dell Technologies, is a significant Bitcoin proponent and wealthier than Michael Saylor. Do not get liquidated. Stay strong and focused. I don't believe this is a bear trap just yet. We're currently trading within a tight range and could potentially dip to around $57,000, $58,000, or $59,000 before bouncing back up. We'll need to break out of this range either to the upside or downside to see a significant move. Here's the bottom line. If you're a believer like me, this is an opportunity. Not only does this create a healthy market with sustainable price runs, but an asset with great fundamentals is on sale right now.
And the last thing I'll say is, the thing about Bitcoin that always cracks me up is when the price goes down, people get upset. But I always tell them, you maybe should go check what you own. Because if you have true conviction, when the price goes down, you should be excited to go buy more of it, right?
Is that what you're doing?
I was literally saying this morning that I'm going to go to the office, I'm going to go buy some more, right? And the reason why that's so important is as the price goes down, if you have a 10-year time frame, you're just getting it at a cheaper price. Your dollar cost averaging down. And so I do think that Bitcoiners, more so than almost any other asset class, historically they've bought, they've held for a long time, they continue to dollar cost average, and they're using these timeless investing principles to create real wealth for themselves.
I don't know, if you bought at 8, it's tough to buy at 60.
Well, if you bought at 8,000 and you still have cash, right, where else are you going to put it? I think that's the big question is if you want to protect your wealth and you're getting paid a salary every single year, that net new capital, where do you put it? You can put it in the stock market, you can put it in Bitcoin. But again, if you go and you look over a long period of time, what is beating inflation? Gold is a great example. Over the last 5 years, if you've held gold, you've actually lost purchasing power in real terms.
Right.
And so naturally, Bitcoin ends up being one of the only solutions that people are picking.
Thank you for tuning into DeFi Compass. We've covered a lot today, from the latest market movements to the exciting future of decentralized finance. Remember, the DeFi space is ever evolving, and staying informed is key to navigating this dynamic landscape. If you found today's content valuable, make sure to subscribe to our channel and hit the notification bell so you never miss an update. We're committed to bringing you the latest insights, expert interviews, and in-depth analysis to help guide your DeFi journey. Stay informed, stay invested, and together let's chart a course through the world of decentralized finance. I'm Johnny Hash from DeFi Compass, and I'll see you in the next video. Happy investing!